How much money will they actually get from employment insurance? That's probably one of the first things that hits your mind after a layoff. And I'm sure if you go out and research, the answers out there can feel vague and confusing because you're already going through a lot during that particular phase of layoff. And you might hear things like you will get 55% of your earnings, or there's a weekly pay max payout, but what does that actually mean for you? And it could be based on your salary that you would be wanting to know about. And in this video, I'm going to show you how to calculate your employment insurance, data payments in Canada, step by step. And we'll go through the real formula Service Canada uses in 2025, and actual salaries, and walk you through two real world examples so you will know exactly how the math works. Whether you made 40K or 90K last year, you will leave this video knowing how EI payments are calculated and what is the maximum amount in 2025 and what factors could affect your final payout and how to estimate your payment before you even try to apply. And I'm not going to use any sort of a financial jargon because that's not my expertise. This is real help with real sort of numbers that I'm trying to put across to you from HR lens. Because when your income suddenly stops, you deserve clarity and not any sort of a guesswork. So I'm going to break it all down for you and let's do that together. Now let's understand the EI formula and how that actually gets calculated. When you apply for employment insurance, the basic rule is this. You will get 55% of your average insurable weekly earnings up to a maximum set by the government. So what's the insurable earnings? It's your regular salary or wages, the part you paid EI premiums on. Things like bonuses or commissions might also count depending on the kind of job that you are into, but we will keep it simple for now. And as of 2025, the maximum insurable earnings is $63,200 per annum. That means even if you made more than that, EI only looks at the first 63,200 when calculating your payment. So the maximum weekly benefit is 55% off of $1,215, which equals about 668 per week. And if your income was lower than that, you will receive 55% of your actual average weekly amount. And we will walk through real numbers next. And also, there's something called the best weeks calculation. And service looks at your highest earning weeks during a qualifying period to calculate your average. Because some people's hours would vary week on week, so they typically look into the best weeks formula. So the number of weeks they use depends on your region's unemployment rate. So it varies from New Brunswick to Alberta to Ontario to British Columbia. So that's the foundation. Otherwise, for kind of say, but now let's plug in some examples so you can see what it looks like in real life. A real example that I'm going to take about is an average salary case. Let's run it with an average Canadian salary. So, say you are earning $52,000 per year before you were laid off. And that's roughly about $1,000 per week in gross income I'm talking about. And you have to remember, like we talked about, EI gives you only 55% of your average weekly insurable earnings, means 55% of $1,000 is $550 per week. And that's your gross EI payment before taxes. Means EI payments are also taxable. So depending on your province, a small amount will be withheld automatically, let's say around 10% for federal tax. Or if you're New Brunswick, maybe 15% goes off. And that brings you down around $495 per week in net employment insurance. And that's about $990 every 2 weeks, which is how EI payments are typically delivered. And a few key things that you should remember. If your best weeks were lower than average, for example, due to unpaid time off or inconsistent hours, your EI might be slightly lower. You can check how many best weeks Service Canada will use in your region on their website. It usually ranges between 14 to 22 weeks. Unfortunately, you don't have the choice to make them choose which weeks they want to use. They'll calculate automatically based on the information that they have on their record of employment. But this example gives you a baseline. Now, let's look at a higher income case as well. Now, let's look at a higher income scenario. Say you are earning about $85,000 a year before you are laid off. And if you break that down, it comes about $1,635 per week. But you have to remember EI cap, like I talked about, 55%, which also has to be looked in from the maximum insurable earnings per se. So $63,200 is the insurable earnings. So that's the maximum cap that it has, although you may be earning $85,000. So instead of taking 55% of $1,635, which is your actual weekly pay, Service Canada calculates 55% of the 65,000. So instead of taking 55% of $1,635, Service Canada 55% of $1,215. That equals about 668 per week, which is the maximum weekly EI payment set for 2025. And this might increase, this might go down, this might come down, whatever it is. That works out to be about 1336 every 2 weeks before taxes again. No, just like the previous example, EI will deduct federal taxes before it's sent out to you. So in your net EI might be closer to about 1200, 1250 biweekly, depending on where you are currently residing. And this can be a surprise for higher earners. You don't get your EI just because you made more money. If you made more money, obviously, probably may have had some sort of savings. And once you hit that cap, that's it. You don't get anything more than what they have set as boundaries. So even if you made six figures, your EI max out the same as someone who is making $63,000, which is much lesser than what you're currently earning. So knowing that helps you plan ahead, especially if your expenses were built around a much higher income. You'll also have to think through how you're going to survive in case something unexpected happens to you. So now that you know the formula and how to run the numbers, let's talk about what can actually change your EI amount. Because even if your salary is clear, there are a few factors that can impact your final payment. Number one is best weeks count. Like Service Canada does not just average your last few paychecks. They use a set number of highest earning weeks called your best weeks. The number they use depends on your local employment rate, which ranges from 14 to 22 weeks. And fewer best weeks means each week carries more weight. And also the second aspect they look at is the regional variations where you live, where currently the province that you belong to also matter. And your region affects both the number of best weeks and how long you can receive employment insurance. And third one, part-time work while you're on a EI. Per se, if you pick up a side gig or you work part-time while you're on employment insurance, Service Canada accounts that money as well. They'll adjust your benefit accordingly, but it has to be actually worth reporting because you can keep a portion under the working while on claim rules. And EI is taxable, and if you earn too much elsewhere or your claim gets adjusted later, you'll have to pay them back. So that's called an overpayment. So they'll ask you for, okay, pay us back because you earn more than what you should have while you're in that EI scenario. So keep this in mind. They will help you avoid some sort of surprises and odd timings. And the sixth aspect that I would like to talk today is how long do you get that employment insurance? Because people may be wondering, okay, so I get EI forever? Answer is no, obviously. The duration of employment insurance depends on mainly two things: how many insurable hours you worked in the last 52 weeks, and what is the unemployment rate in your region when you apply. And most people usually receive the employment insurance for anywhere between 14 and 45 weeks. Just for you to get a basic idea. So if you work the minimum required hours, usually around 420 to 700 hours in the last 52 weeks, you will qualify for fewer weeks. And if you worked full time all year or had more hours, you may get closer to the maximum, which is set about 45 weeks. So Service Canada typically uses the table to match your hours and region to specific benefit duration. You can check their eligibility chart online or just call and ask them. They'll tell you what applies to your case. And also there are some special rules for people who do seasonal jobs, people with multiple jobs, or those switching from other benefits like parental or sick leave. So it's not just about how much you're going to receive, it's about how long you're going to last that amount. Knowing this helps you budget, job hunt, and plan your next move with a lot more confidence. So in this video, we talked about how much money will I actually get from EI in Canada, and now you have the answer. We learned that EI gives you about 55% of your average weekly insurable income up to a maximum set by the government. And we also tried breaking down with real salary examples on one average. And of course, I've taken higher income. So you could see exactly how the math works. So, and we also talked about the factors that affect your employment insurance, like your best weeks and where you are currently living. And if you're working part time, what happens, and also the taxes, which are also have to be considered. And we also talked about the kind of duration that you can expect EI to come into your bank accounts. And also, again, that's going to be linked towards your hours and your region that you belong to. And this information, I'm sure, is going to give you some power to assess, to plan these kind of adversity. And also, it's going to be a bit of a stressless scenario, focusing on what is going to something that you're going to do to get your next job. So if this helped you, hit the like button, subscribe for more Canada specific move, and drop a comment if you got questions or want me to cover a specific topic in my next video.